Thank you, Mr. Chairman. Some of these may be a little redundant, but rephrased, and Mr. Posey's question about whether or not you gentlemen ever worked in a bank, I think, is significant. It's become more significant because I'm having a really hard time here this morning understanding how hands-on this process is, if it's hands-on at all. But as we know, mergers require significant upfront and ongoing investment and the commitment of resources. And that includes kind of finding a target, conducting due diligence, and negotiating the terms, right, of the transaction. Once a target is identified, the banks have to prepare the appropriate regulatory filings, engage with regulators, and prepare for post-approval business process. So given all the upfront work that happens in a merger, it should come as no surprise that few deals are really blocked because everything is kind of in order. So let me ask you this. Does the FDIC and the OCC currently believe the lack of denials of bank mergers means that the framework is working, or is it clearly ineffective at this point? And Mr. Anderson, I'd ask you to go first on that.
I think we believe our framework is working. I mean, I think ultimately we are evaluating the statutory factors and coming to conclusions on that. Our process is such that to the extent that a merger is not going to meet the statutory factors, it's a very iterative process. We would talk to the institution and frankly let them know that we would be recommending potentially a denial, and in many instances, institutions withdraw. But I think overall, I think we believe that our process is actually working.
Mr. Dowd?
Thank you for the question. It's a very good question, and a question we should be asking ourselves on a regular basis. I agree with Mr. Anderson. The process is working, but I also recognize that there is always opportunity for improvement and refinement, and that is the exercise that the OCC is engaged in right now, and one that I would suggest that all of the federal banking agencies and the Department of Justice should engage in from time to time.
So I don't think there's any doubt that the consequences of the delays, the merger delays, has a significant impact on the banks involved, right? Causing greater operational risk. Certainly expenses are going to increase as there's a delay. And then the reputation of the bank. I mean, if you're a customer of that bank, and we know how this works, that there's kind of this rumor mill that starts, and who's going out of business, who's going to remain in business, am I going to have to switch accounts, am I going to have to get a new debit card, all these things happen in this process. And this is not just a problem of the big banks. It's obviously, the smaller the bank, it's probably more significant. So the uncertainty in the merger process, it limits opportunities, I would say as well. But the banks just can't simply hit the pause button. They must continue to market their services, market their brand, make sure that they're still in business. It's a business, right? So how do you consider the cost of delays? Have you looked at these? Have you examined these and said, this is a problem for us if it's having that type of impact on banks across the country? Mr. Anderson, I'd ask you if you guys have looked at this or not.
Well, we're certainly aware that at times applications have not moved as quickly as we would like. I think that part of the proposed SOP and the updated Bank Merger Act interagency application form that we put out for public comment as well, part of that is to make it clear how we're going to evaluate the statutory factors, as well as to let institutions understand, if you will, the type of information that we need to make a decision. And so I think ultimately our hope is that combining those two will come out with a more efficient process and be able to move some of those applications faster.
So is there any, Mr. Dodd, I'll ask you this, is there any sense of expediency? Is there any awareness of the impact you could be having on a bank if in fact this work can't be done and done quickly?
We are keenly aware of the issues that you have raised. On the spectrum of small institutions, we process those in general very quickly, very efficiently. With respect to the larger institutions, those transactions are more complex, and complexity drives timing. for a clean transaction involving large banks, we have the ability to move very quickly, and we are, again, keenly aware of the benefits and sometimes the need to move quickly on that front. But a lot of it is dependent on what comes in on the application. And to the extent that an application arrives that introduces
gentleman's time has
potential
expired.
safety and soundness and risk concerns for what would be the resulting
The gentleman's time has
institution,
expired.
we want to ensure that we are on top of those so that the ultimate institution that is,
I'm sorry,
that is approved.
The time has expired. The time has